Greetings, my YouTube family. Thank you so much for visiting my channel. And today I'm excited to review the Palantir stock, basically to assess to see if Palantir is a good stock. So I'm going to do just that. And before we get started, I'm going to disclaimer that this content is meant for educational purposes, so it should not be taken as investment advice. Now, specifically, I will share with you my thoughts about, Palantir, what they do, their earnings highlights for Q4, that is December 23, and what I think about that, and also do a quick financial analysis to see, if this is a good business to invest in, and what I would also consider when investing into Palantir. So hang on and see uh, how far this will go. Now, in terms of those who don't know me, my name is Isaac Jonas, and today I'm currently recording this from Portland in Oregon. So I'm excited to be sharing this content as part of what I do for a hobby. And what I do pretty much is I'm a retail investor in the US and Canadian stock exchanges. And um, I like creating content through my handles, like Streetwise Economics, where you are watching this, and also other social media handles. Now, um, because of what has been happening, particularly because of a lot of stocks in the artificial intelligence sector, there's been a lot of talk about, Palantir being the next big thing in terms of, being one of those top companies that is going to dominate this sector. So I'm just going to um, share with you, for those who don't know, Palantir is an analytical software company that focuses on leveraging data to create efficiencies in its client organization. So this organization has government clients and also other commercial clients via their Foundry and Gotham platforms. So it is based in Denver, that's the headquarters, and it was founded in 2003, and it went public in 2020. So it's a very young company, when you compare with other companies. But for those who don't know, for a glance, when I want to invest in a stock, I like to take it that I'm buying a piece of that business ownership. So I take it quite seriously. So uh, for a glance, the 52-week high, I'm recording this video today on the 28th of February. Palantir's high point was $25.52, and it was as low as $7.19 1 year ago. So when I look at other indicators that I look at the return on equity, it's 6.04. It's below my standard. I like 15%. Return on assets, 5.26, but it's still growing. So there might be potential. And I also look at the revenue growth. I will share more details about that. So here, there's not much that I can conclude, but I'm just sharing this with you. But you can see that it went as high as also almost close to $40 and dropped if you take the 5 year time frame. But it has been growing fast, and also because of what is happening in the artificial intelligence sector, mostly dominated by NVIDIA. A lot of people have been considering investing in Palantir. But let's hold on for a bit. In terms of the outlook, I got this information from the Security Exchange Commission filing for their earnings for 2023 Q4 earnings. So in Q1, this is this quarter, uh, they are expecting that the revenue will be between 612 and 616 million, and then the adjusted income from operations to be between this range of 196 to 200 million. But overall, the whole year of 2024, they're expecting revenue of 2.6 52 to 2. Let's say 2.7 billion. And this revenue is focused to come from, commercial revenue, which they are focusing that it will grow by 40%. So I mark these things, when I am considering investing in stocks. So 40%, and then we will see after this quarter and after the year if they will, own up to this. And their free cash flows are also poised to be within this range of 800 million to 1 billion. So it's growing very fast. So these are some of the things to look for. Now, in terms of the earnings that they uh, uh, released on February, I think it was on the 5th, 2024, they did beat the expectations by 5.39%, right, in terms of their revenue forecast. But also, this was a very interesting thing, because when you beat, earnings, it is something that usually, in most cases, some investors become bullish. So this is something that is good. And now, in terms of the earning highlights, what was outstanding was that they reported net income of 93 million, representing a 15% percentage margin, which is good. These are things that I look at. Now, also, they have consistently, for the past five quarters, they've been making profit, because these are some of the things I don't like to invest in businesses that are losing money. So this is a very interesting thing. So I like to see businesses making a profit. So this is quite good, and their earnings per share uh, is focused was actually 4 cents. So these are some of the things that I look at. Revenue grew by 20%, right, year on year, and 9% quarter on quarter to 608 million. So this is quite interesting, and you can pause and just read through this. This is the information that I got from their filing. So all in all, it was a very good year for Palantir investors. Now, what I do when I'm investing, I like to look at the financial position of a business. So I went to the income statement, and what I like to see, I want to see consistency in terms of the income, net income growth. So when I go, I see here the revenue. This was from 2018, right, to December 2023. You can see that this number was growing from 595 million, right, in December 2018 to 2.2 billion in December 2023. So this is a very good thing, because you can see that it was increasing. You can see by this graph. I also like to look um, at their operating income, but still, in this case, I like to just look at the revenue, right, which I did, and then the operating income after lessing these expenses. I think this is something that, for me, I like to look at the next thing in the balance sheet, which is the long-term debt. So now, when I go on the balance sheet, the one thing that I look for is debt. I don't like to invest in businesses that have a lot of debt. You will see that in 2019 they had about 396 million in debt, and then it dropped to 197, but now they have no debt. So this is a plus for me when I'm looking at a business, because this is analysis is for December 2018 to 2023. So they have no debt from these financial statements, from the balance sheet that they see in terms of the long-term debt. So this is something that is good, because when there are other things that can happen to the economy, when a company doesn't have debt, that's a good thing, because they can ride through that tough period. Now, I then go into the cash flow statement, and on the cash flow statement, I like to see increasing cash flow statement. You can see here that from 2019 it was about minus 178 million. Free cash flow, it was negative, right? So they were, they didn't have the money, they were losing money, right? And then you see that it's somewhat worsened in 2020, but now, starting from 2021 December, they had 321 million free cash flows. So it started growing. It's slightly decreased because sometimes it's a growing company, it's a growth company. So they might be, reinvesting the capital. So this is the first thing that I look at. Now in 2023 December, they had 697 million, almost a billion, right, in free cash flow. So this is good because then they will be able to meet their short-term cash obligations. So when I go to the financials of a business, I look at the income statement, I look at the revenue, right? Net income, revenue, is it growing? Then I go into the balance sheet, I look at the long-term debt, and then on the cash flows, uh, free cash flow in the cash flow statement, I look at the trend. And this essentially, I then want to see more free cash flows compared to the long-term debt so that they can pay off that. So this is a plus for me now. Now, after this, you can see that is passing this test. Palantir is passing this test, right? But now, I like to see the insiders. How are they trading the shares? Are they buying or are they selling? So I pulled out this information from Rule 1 Investing, that's the toolbox that I use. I can see that the last sales actually were in March 2023. Actually, that was in April, actually. Right, you see that there was a director, Alexandra Moore, they sold, right? But this was like, April 2023. So there hasn't been real, like latest, sales. Now I can also go on the pages to see if they are buying. So because they have inside information, if they are buying, then that would be a good thing. Now I then, check to see if there are other people that I follow who are, influencers and, people who are, manage hedge funds and stuff. If they are buying into this stock, that can kind of give me a good thing in the sense that they have resources, they are smart people, so they might have, the knowledge or insights that I don't have. So I can see here that Third Point LLC actually they bought their shares in Q3, and these are the number of shares, but they sold out of the position. That was that was actually, you can see, that was in Q1 2021, right? So they sold out all their shares. So this was actually, they bought in Q3 2022, and then also actually then they sold the following year. But now this is not something major for me, and probably because it is not yet in the S&P 500. Yeah, so a lot of fund managers, and they may not have started to invest in this stock because they want a company that is consistent, right? So for me, that's something that I also look at. Now, when I look at investing in a company, I want to see what are their competitors. Do they have a competitive advantage? I can see in this sector that they are not quite, they don't have the MOAT, the competitive advantage. You can see that actually Microsoft is, in this sector is actually way ahead. If you were to rate this using this score from row one that I use, it is 95%, and Adobe in their particular niche, they are a dominant force. So you can see that Palantir is 25. So this for me is a red flag, right? Management, their finances, they have to prove consistently in terms of profitability, right? So that's something. Return on equity, it has been negative. You can see negative, 15%. Return on invested capital is again negative. So for me, this is a red flag, right? But I understand that this is a stock, that the business that is just starting to flourish. Now the free cash flows, they have some free cash flows. So um this is just something that I look at, right? So now in terms of looking at the merits of investing in this stock, is still starting to gain traction. So I like the fact that it is managed by the co-founder. You see companies that are founded by people and who later on manage them, like Facebook, now Meta Platforms, Mark Zuckerberg. You look at Microsoft, he was Bill Gates was a co-founder. They usually succeed. So this is something that is positive. They have positive outlook. Like I said, they are hoping that in June this year they might be part of the S&P 500. So that means the shares might be even more liquid because fund managers may have will have access. They will be by law required to buy into the S&P and even Palantir, right? So now, but my concern still is that they don't have competitive advantage. So it's not yet at the point that I would say I'm comfortable to buy a position in this for one reason. Currently, the valuation, I think for me, I would like to buy around, if it retraces to $15 or $17 a share based on their cash flows. And one thing most people do is that they rush into buying because a lot of people are talking about artificial intelligence being the next big thing. But you can lose money by just buying at the top because you can buy and then it may just retrace or even decline. So for me, I always want to buy when there is a good margin of safety. So what I do is I make sure that I wait for events. Let's say they miss their earnings or there's negative news, something that I believe would not change the fundamentals of that business, then I can possibly buy. For right now, for me, it's not a good time to buy this particular stock. Now, in conclusion, this stock is very interesting. They've been profitable for the past 5 quarters and they've been beating earnings. So this is in my checklist, but it's not quite there. So I thought I would just share, but I may also just consider at some point just waiting, right? And what some people do is they use options to say, let's say I can just buy a put to say, let's say my strike price would be $15. If it retraces there and it then my option gets into the money, I can then buy those shares at that point. So that's something to consider. But for me, I'm just waiting, but I'm quite excited that it's something that I'm looking forward to seeing how it will do in the future. So thank you for those who haven't subscribed. Please consider subscribing to my channel so that you don't miss out when I release analysis and um, my reviews in terms of what is going on in the stock market. Thank you, and may the markets be with you. Bye bye for now.